Hey, what's up, guys? Amy here with the Del Real Group, and I'm back with the end of the first quarter market update for San Joaquin County. Yes, my friends, you read the headline correct. 7% increase in the median price point for the first quarter of 2023. Talk about a wild market. The rates go up, it squeezes affordability, and sellers decide to strike. Buyers decide to step back, and as soon as you see a little bit of break in the rate, buyers step back into the market, really showing the strength of the demand that the buyers have. There's a very high demand because they're being pressured with the rent increases. Even though they want to get into the housing market, there's just not enough inventory. And as soon as you get a little break in the rate, you see a surge of activity happen. Take the California Dream program, for example. For those of you that don't know, California rolled out a shared equity program that provided up to 20% down payment assistance. And they allocated $300 million for this program. And it was completely ran out within 8 days. It was an amazing program that a lot of buyers jumped all over and took full advantage of, which is why we're starting to see an increase in the pending sales. Let's dive in, starting with inventory. As you can see here, inventory is continuing to decrease and currently down 11.3% month over month. Pending sales are again up 13% from February to March, which resulted in another increase in the closed transactions of 25%. There's a lot of activity in the market right now. Buyers are responding very well and adapting to the low 6% interest rate, which has really stimulated the market. Again, we're not seeing this big surge of inventory. There's currently very little supply and still a very high demand. But whenever you crush the affordability, it creates a lose-lose situation for everybody. Sellers are selling at a lower price and the buyers are paying up to 20% more in some cases on their monthly mortgage payment. And then yet there's still less transactions going on in the real estate industry. Agents, lenders, appraisers, inspectors, title companies, and everything surrounding the real estate industry gets affected by this. Moving on to the list to sales price and the days on market. Original list to sales price has increased by 1%, which means sellers are currently getting 96% of their list price. This tells me that sellers are becoming a little bit more realistic on their price, whereas 3 or 4 months ago, they were selling at negative 7%. A lot of the reductions initially were on the seller's expectations. Now sellers are expecting a more challenging market because they're starting to understand the affordability destruction and what's happening when the buyer's payment is 20% higher because the rate jumped from 3% to 7%. With the recent surge of activity we've had with the Dream program, I'm interested to see next month's numbers as I was actively out shopping with a handful of buyers under the $550,000 range, and there were multiple offers on most properties, typically over asking price. The days on market has also decreased by 6.7%, currently sitting at 56 days on the market, even though it feels more like a week in real time in some cases, depending on the price, location, and overall condition of the property. Moving on to the median price point, looking at the peak price of $568 in May of 2022, we are down 8% from the peak, up 3% month over month, and up 7.1% in the first quarter of this year. Again, for a recession, for pullback in pricing, we have not seen a balloon in inventory. We have not seen a complete collapse in pricing, but we have seen the affordability destruction due to the interest rates. Let's check out the months of inventory. You guys, we only have 1.2 months of inventory right now, meaning if we were to stop listing homes today, we would clean out all available inventory in San Joaquin County in just slightly over 4 weeks. Remember, a traditional market is anywhere from 4 to 6 months of inventory. Right now, the market is still moving and you're starting to see some of the pressure ease on the pricing of the monthly mortgage obligation for the buyers as the rate continues to come back down. It is a super interesting market right now and very difficult one to navigate, working with both sellers and buyers. I feel for the buyers right now, even though they're buying 8% lower on price, their payment is still 20% higher, and it's definitely hard for the sellers that are getting 8% less as well. But this is the time where you get strategic with negotiations. If you're in the market to buy a home, please have a lot of patience and remember, measure twice and cut once. I'll continue to monitor rates and inventory and the price point and keep you guys updated. As always, I hope you've enjoyed your market update. Please feel free to share this video with anyone, family, friends, or coworkers that you think would find this information valuable. Don't hesitate to reach out if you have any additional questions. I'm here to help. Until next time, see ya.